The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day as we kick into 2016. Have to love it. Dare to believe. Market-wise, let's take a look at it out here. We have the Dow down 17, NASDAQ off 12, S&P's down 2.5, gold contract up $2.90, trading at 1,078. Silver up 14 cents at $13.99. Platinum up $4 at $8.88 an ounce. Copper up a penny at $2.09 a pound. Light sweet crude down 89 cents, trading at $35.88 a barrel. Oil, folks, it's going to go after that B point. It very well could be an ABC structure on the way down. If, in fact, we have volume as it's going after these lows out here today, I don't expect we're going to get to the 35 today. You go after that tomorrow and have the same type of volume we had today, that'll be breaking a B with an ABC structure on the way down. We'll get you $28 oil. Huge. Bonds, 10-year up 3 ticks, 126.08. 30 down 18, 153.22. King dollar up 517 ticks, 99.45. The euro is down 85 at 107, and the yen is trading at 118.97. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We go to the SPY. What you're looking at is this. Right now, the SPY is trading at 20107, and what we had out here, you're up 5 pennies right now. Yesterday, you come down, wide price spread, accelerated volume. Now, you broke the swing points, and what you did is that you got into the swing that was established on December 18th. That swing had 251 million shares. We broke that with 222. Bottom line, that is 30 million shares lighter. That's where your rejection comes from. We're building some cause now to do what? To go right back down into that area. What I expect you're going to see is that we're going to be at the 195.03 area. That is the benchmark from October 2nd. NDX 100, the 3 Qs. Same type of setup in the 3 Qs. What you have with the 3 Qs is that in the 3 Qs, by the way, folks, I have a huge, very hard time holding price. The 3 Qs, same type of setup. And, you got into that December 18th. That was triple witching. Bottom line, yesterday we did volume of 50 million versus the 53 million. You got a little higher today with lighter volume. You're giving it up on price. You're right back underneath the 109.83, and that's all it took in order to basically recharge that whole area. I suspect you're going to not only go after the lows of yesterday on the 3 Qs, they want to go into this 104.01 area. That was the high of that October 2nd benchmark. Gold contract. What do we have with gold? Gold continues to catch a bid out here, even with the dollar index going into higher price. What we have with gold is this. Gold contract traded to 1,081 today. You're at 1,078. We've done 97,000 contracts. Yesterday, you got to 1,083. We did 160,000. That is building cause, folks, to get into this December 4th high swing of 1088.30 on this contract. And, we'll see whether we can take it out with volume. The way that gold pushed yesterday, the way it's hanging right underneath the 1,088.30. If you're a bull, you like that situation, because what you don't want is that you don't want to get over it, close under it with lighter volume. What you want to do, which it's doing, it's laying right underneath it with volume expanding. Silver, different animal with silver. Now silver is highly, well, it's just about one of the highest volatile commodities out there. Silver continues to need to get back inside $14. And, we got over that yesterday, had some good volume yesterday, still gave it up, and we're at $13.99. And 14 does matter, folks. That's the bottom line. So we'll see if, in fact, silver can catch that bid and get up and over that number. Bonds. We take a look at the bond market. Sorry, folks. I'll fix that mic. Bond market out here. What we have with the bond market is this. Bond market right now, we are trading TXH. Okay, the 10-year bond right now is at 126.08. We moved higher yesterday, had volume behind the move. The high of yesterday was 126.18. Bonds are building cause to get into this 127.10, which is a high volume swing. That is the 10-year. We take a look at the 30-year. What you have with the 30-year is this. 30-year sideways move out here today, 194,000 contracts. Yesterday, you got up into the price point of 155.14. Now, the high in the 30-year, folks, okay? The closing high in the 30-year is 157.16. No, 157, yeah, 157.16. You're right next to it. That's the bottom line. So I suspect bonds continue to want higher price. King dollar. What do we have with King dollar? King dollar out here trading at up 37,000 contracts. You're at 99.48. Bottom line is that this can get into, we came down fast, furious on December 4th. This can get into this 99.96 area. Oil, this is the disaster out here, folks. This is the next disaster that looks like it's going to hit. It's going to be wild if this is an ABC down. We take a look at this oil contract, and what you're going to see is this. Oil's down 2.4% today. We are down 92 cents as we're talking, $35.84. Expansion of volume, 370,000 contracts. The swing point on this, if I take the 403,000. 403,000 contracts. You break that, and it's going to go after tomorrow. You break that with volume, oh man, it's conservatively, it's an ABC, 10-point ABC down. The reason I say conservatively, because if I actually took the 44.80, yeah, no, it's not. It's $9. It's $9, which gives you. Did you $31, man? No. Yeah, $31. That'd be pretty intense, folks. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is down 2. Nasdaq's off 7. S&P's are flat. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow down 21, Nasdaq's off 11, S&Ps are down 3, as we do each and every Tuesday at 20 past the first hour. We have our man, Mr. Basil Chapman. Basil does an outstanding show here every trading day, 11 to 12 Eastern Standard Time. Now, don't forget, folks, we have a new schedule come 2016. On Monday, Wednesday, Friday, we go 9 hours live, 8 o'clock in the morning to 5 in the afternoon. Tuesday and Thursday, different ball game. We go from 7 o'clock in the morning to 6 in the afternoon. 7 to 8, Nico and Paige kick us off every Tuesday, Thursday. Great health show, keeping you healthy, getting you ready for the trading day. Our man, Mr. Andy Heck, 5 to 6, right after me. All about commodities, awesome show. And then each and every trading day at noontime, TD Ameritrade Thinkorswim. 5 days a week, they're doing swim lessons. Basil Chapman, what's going on?
How are you?
I'm doing great, man. Happy New Year.
And a Happy New Year to you.
Totally.
Whoa, what a day yesterday for the start of a year. We haven't had that for a couple of decades there.
Action.
Yes.
So, what are we going to look at?
So we're looking at my usual Dow chart, and what's really interesting, if you look on the left, this is the daily Dow chart. On the left, you will see it says match. And that match has the May 18,351 high, the May 19th high in the Dow. And it shows 2 pink trend lines.
Yeah.
And these trend lines basically make a channel. And the Dow, although it felt very weird, especially if you're looking at this orange line here, which is the 200-period exponential moving average, just kept bouncing around as if there was a tilted tube to the downside. And the price just kept running from the top to the bottom, to the top to the bottom, until, and we made slightly lower highs and slightly lower lows, until finally it was August the 20th, where the Dow just smashed to the downside, and we had those 3 very strong down candles to the 15,370 low on the 24th of August.
Right.
Well, my contention is that the market is made up of the price point of human emotion, and those emotions don't really change very much, especially when patterns are formed. And what happened is on the 3rd of November, the Dow made a high of 17,977, having had a tremendous rally from the 15,370 low. And the price keeps going higher and higher, and it comes up to 17,970, turns around, and in the Chapman wave we call that a peak F, and it comes down and it pulls back to the 17,210 level, over 700-point decline, and it felt terrible, except you then ran up, and that's when it started the same kind of channel with almost the same parameters. In fact, they look almost identical. And what happened was you kept bouncing. Remember, week after week, we talk about the volatility in the market. Historically, it's been nothing. It's been the most tepid market for almost, it's actually now just over a year. What's really interesting is that this pattern went yesterday, even though it felt like it was most incredibly strong down day. And at one point, we were down almost 500 points, and we came back over 200 points to close above the pink trend line. And today, even with this up and down weakness, we're holding this trend line. So for me, it's quite easy. As long as we're holding this trend line, that's going to be at least a positive to say that there's a chance, and I'd say this is what I'd said to subscribers this morning, that we're bouncing around. We held the trend line, and that the high of 17,200 could be attempted today. Well, we went to 17,195 and then turned down. So this is going to be very important, because if we start trading the 16,800s, that starts to match in an earlier time frame what we saw before, which was really, what was that? So that goes May, June, July. So call it June, July, August, September, and then you get your August. So you've got over 4 months of that sideways move. This would be in a much shorter time period, because it'd just be from November the 3rd. So that's all of November, all of December, and we've just started January. So this is going to be very important. Then for subscribers, well, we've got longs and we've got shorts, and we've got more the dividend type stocks, which seem to be holding very well at this particular stage. And we're still short. I'd spoken to you about the automotive part industry. That whole sector had been just unbelievably strong. They'd been leaders all the way up into late 2015. For years now they've been doing that. And then all of a sudden they made tops. So we're short. We've been short on and off Orly, which is O'Reilly Automotive. It's down quite sharply. It's up a little today, but from where we shorted it, the last short position. If you look at AZO, which is kind of the leader in the group, that's AutoZone. That's come all the way from the high of 803 down to it's at 740 now. So that's the biggest decline it's had in quite some time. And the monthly chart that still hasn't taken out the 9-period moving average. And the other one is AAP, which is American Auto Parts. And they've gone from a high, I believe, I didn't write it in. That was a high of 201, and it's trading now at 151. So you can see that makes sense, because we've been selling so many new cars that it, in a way, starts to impair the ability of the auto parts companies to garner all the spare parts from cars that have been 11, 12, and 13 years old. So I think that's starting to change. So this might be a significant turn down in that area. So one by one, we've been looking at the restaurants, we've been looking at the waiting for the auto parts, and now the auto parts have come down. So there are fewer and fewer sectors that are leading, and yet somehow the market is kind of holding its own right here. It hasn't broken that. I'll just go back to this so people can see. Look at these trend lines, and all I can say is if the Dow, instead of breaking down under 16,900 tomorrow or the next day, is able to get into the 17,250s, try for the 200-period moving average at about 17,300, it'll stall the decline. But when you start to see so many monthly charts rolling over, you've got to be prepared that at some point we're going to be turning down, and we could turn down quite sharply. We just have to wait for that.
When you say that it's holding the trend, I mean, all the indices are below their 250 and their 9, right? You're talking about holding a channel line, right?
Just the channel line, yes. Right. In fact, if you're looking at, thanks for bringing it up. I was going to bring it up, and I got carried away. We're talking about the technicals in the Dow. This is the thing that's really important. The MACD and the stochastic are not very good. So there are times where price can hold until the technicals reverse back up again. And then you've got to see, is there really strength there, or is this going to be just a single bounce? But in the meantime, the reason why the Dow itself, and of course we're only talking 30 stocks, but it's now a much better mix than it's been for decades. This is the first, it's really it's well balanced, almost like the XMI market index. So this is a much better gauge of the Dow itself than it has been previously. But if you are looking at it, as long as the price maintains this narrow trading range, but what the technicals are saying is it's fairly limited upside, and it's really, it went, was it Wednesday? Yeah, Wednesday a week ago. It went right to the door. It went right to that pink line at 17,750. I thought it would be able to break above, and it didn't. It turned right down and went to the bottom line. And that's what these channels tend to do. So I'm watching it closely, watching the volatility index, and we'll go through a bunch of this tomorrow in my Market Technicians Hour at 11 o'clock.
And folks, you can come over to our website at TFNN. You go to newsletters, go to trading newsletters. You can test drive the opening call, 30 days, absolutely free. And of course, don't forget, 11 o'clock to 12 o'clock every trading day. I'm Mr. Basil Chapman. Outstanding show. Basil, you have a great one, a safe one. Look forward to the show tomorrow.
Thank you very much, Tom. You too.
Thanks, man. Okay. You stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 13, Nasdaq's down 8, S&Ps are down $1.50, and one of the actual culprit out here, folks, in all these indices, which is pretty wild, is Apple. Apple is down 247. You're trading at 102.91. Bottom line is that this baby is making its way down to this 92 area, which is pretty intense because right now we're at 102.84. If we look inside the NDX 100, the strength versus the weakness, this is how you have it. C-Trip is the strength. That's up for 5%, $2.39. Micron Tech is number 2. That's up 4% at 57 cents. Taken away from it, on the way down, you have Skyworks. Skyworks is down 5.5%, $4.56 at 73. AFCO Technologies is down 3%, $4.62. Priceline is down 3% or $39 at $12.06. And good old Apple is coming up the rear. That is down $2.61. Inside the Dow Industrials, what do we have? The strength versus the weakness inside the Dow. The strength out here is Walmart. Walmart's up 2.5% or $1.41. DuPont is up 1.5%. That was the killer last yesterday. That came down hard yesterday. Nike is the third leader. That is up 1.3%. Taken away from the Dow. The culprit inside the Dow is Apple once again. Apple's down 260 at 102. Goldman Sachs is down 398. 2.5%. Now, let's go take a look at Goldman, because there's something critically wrong with these banks, folks. These banks, well, just check out Goldman first, okay? So, your downdraft August 24th, and it's a high volume low, is 172. We're at 173.13 right now. That's insane, okay? When I say insane, what I mean specifically is that these indices want to come down to those lower levels and go after them. You know, Goldman had first come down. If we go back 6 months in Goldman, this is how it goes. You're at $214 in July. Straight line move down to 172. You do a counter trend bounce, takes 2 months, you go to 199. That was November 9th. December 9th, January 9th, we're almost 2 months later, you're at 173. This baby is going down after that high volume swing low. We'll see whether it wants to bust it or not. If we stay with the financials, we go over to JP Morgan, which is one of the strongest financials. Bottom line, what does it do yesterday? It couldn't get to a high. The high is 70.61. It was generated in July. You're at 63.55. You gapped away yesterday, and the difference in the financials also versus the S&P and the NASDAQ is that they did come down and bust out their swing lows with volume. The JP Morgan had 25 million shares. It took out 17 million. It's continued to build cause at this price. So what we're going to see here is that you're going to be not only down, this is only Tuesday inside the week. I suspect what you're going to be down on the daily and down on the weekly, which is, much more powerful. Bank of America, same setup in Bank of America. Bank of America gapped down yesterday to $16.25. You're trading out here right now at, we did 114 million shares. That was going into 121 million. Needs a little more volume. It's building cause right now. Bank of America has 2 high volume swing lows, as do all these banks. The first one is the 24th of August, which is $14.60. The second one is the October 2nd level, which is $14.63. So bottom line is that these markets, at this particular point, you had the fast price destruction, you had the expansion of volume. What we have happening right now is that you're building cause, and you're building cause to go after those high volume swing lows once again. If you haven't been ever in a fast market, these are very fast markets, folks. And when you are in a fast market like this, the sells come in very, very quickly. You'll get the counter trend bounces. They're selling every bounce. In fact, let me show you something intraday here. Not that I want you to trade intraday, but I want to show you something that is really pretty cool. Intraday, whether we take I'm going to take the NDX 100, right, because I just trade this a lot. So the NDX 100, what you're going to see is this. You had the bump up and inside the Qs, inside the NDX 100 right at the open. That gets to 50, 45, 14. Okay? You go straight down, you hit 44.79. Nice move down, right? Your second high, you bounce up to 45.05. Then you go to a low. Your third bounce, you go to 45.02. Even intraday, what we've had is that you have 3 lower highs, 2 lower lows. So bottom line, what does that set up? That very well sets up that, we'll see if, in fact, we get to, right now, you're at 44.85. We'll see, we're at 44.69. We'll see if it gets into that level, or, in fact, goes to the 57 level, which would be really a fast move down. If we take a look at the E-minis, you bring up the E-minis and we take a look at the E-minis, what you're going to see is a differential inside the E-minis. Not much, but what happened with the E-minis is that it did get to a higher high at 1420 hours. I mean, at 1420 is 220. That being said, guess what? When it took it over with light volume on the 10-minute, if that's what you're trading in. It closed under it. We had volume up there of 40,000 contracts versus 88,000 contracts. See ya! Don't want to be ya. That this market is getting sold on a continual basis each and every bounce that's getting higher. What we also had yesterday, which was a phenomenon in itself, is that there was no fear in the marketplace. You had the VIX go up slightly. You didn't have any downtick. In fact, we had an uptick. And this is saying that the buy-in was extraordinary, which you can't blame it because of the rally that came in the last 20 minutes was extraordinary. At 1540 hours yesterday, you had an uptick of plus 1452. You don't get upticks of buying frenzy at lows, folks. In order to get a low, you need fear in the marketplace, number one. You need a high downtick, number two. And you need, that's the technical setup. The fundamental setup is that what you need is that no matter what financial channel that you're listening to, you need people saying, okay, you shouldn't be buying, or be careful and all that, which we had zero of yesterday. All you had, if I was flipping around a couple between Bloomberg and CNBC, bottom line is that it was saying buy, buy, buy. In fact, they were saying that today when I was saying, oh my God. And specifically what has happened is that buying the dip has been so successful the last 6 years. That's what they asked them flat out now. Would you buy this dip? Yes, 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 I would buy this dip. Yes, yes, yes. So it's like, oh my God. Let's go to the gold market because the XAU, the HUI, they're catching a bid. They're both building some cause, and that cause that is built, the XAU right now is 46.23. And what I expect you're going to see, that thing's going to make a run for that 49.96 area, which is the swing high of December 4th. The HUI, same type of setup inside that HUI. HUI right now is at 114.09. That run is 121.51. And if you would like to test drive the gold report, folks, you can do that for 30 days by coming over to our website at TFNN. You go under newsletters, go under investment newsletters. You can hit the gold report, test drive it, 30 days, absolutely free. You stay right there, folks. We're coming right back. Dow's down 7, Nasdaq's off 8, S&P's down 1.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow up 19, the NASDAQ down 1, S&Ps are up $2.50 right now, and JP Morgan settled another claim with the government. Now, this I got to read you this because this is just so over the top because it's just a continual. Okay, so J.P. Morgan Chase is going to pay $48 million to settle the last in a series. Now, this is picture. This is a Bloomberg article. You talk about being kind. If this was this is like the freaking mafia. Okay, so J.P. Morgan Chase will pay $48 million to settle the last in a series of missteps in the handling of foreclosures during the 2008 credit crisis, according to Office and Controller of Currency. The largest U.S. bank by assets will be failed for failing to meet the terms of the 2013 accord over mortgage servicing flaws, the agency said in the statement. So picture this. I want to tell you what the flaw is. The flaw is that all these banks were fraudulently signing documents, affidavits, okay, that people were in front of them, okay, which is against the law, by the way, okay? Then they made the deal, and they paid huge fines, billions, and then they didn't stick to the deal, okay? So the bank was among, you talk about, let's see, what is that? Organized, basically fraud. The bank was among a group of major U.S. services accused of mishandling loan papers or robo-signing, okay? Robo-signing. And you know what's amazing about the robo-signing, folks? Inside our building on Cleveland Street, we had at one point one of the largest foreclosures attorneys in the state of Florida. And they work for Bank of America. Bottom line, when Bank of America got hit for this, the FBI comes in the building, cleans out all the offices. Guess what? They were in business 3 days later. Okay, it's amazing how these banks can operate. Okay, bottom line, we know it's done. They pay it. It's part of the overhead right now. But you want to wrap your head around it a little because even wrapping your head around the language that couple of these, well, that financial writer is saying, yeah, missteps. It's like unbelievable. It's like crazy, man. And nothing's changed. And what really blows my mind is that when you hear folks sticking up for banks and claiming that they don't do things wrong. They do things wrong, and they have done things wrong continually. There's an absolute, when you read that, there's an absolute disregard for the law, period. I mean, everyone else would be locked up. That's the bottom line. There's no doubt, man. You'd be locked up. You'd be locked up for a long time. Okay, so let's go over and take a look at the XLE. We got oil that is going after these lows. XLE, not bad shape. Okay, I wouldn't be buying this baby right now. It's bouncing along these lows. The low in the XLE is, let's see, 58, might be 57. Yeah, 58.21. 58.21. That was established a couple weeks ago. That was established December 21st. So you had 58.21. You get a small counter trend bounce that went up to 62. This looks to me like we're going to go back and test this area once again. Let's put this up on a... Yeah, actually, when you put this up on a weekly, it looks bad. On a monthly, it looks like we're going to go after... Well, it's a high volume swing low at 58.21. So we have 58.21 with a high volume swing low. You're already into the... This is pretty intense. So when we bring this back, October of 08, folks, the high was 63 and the low was 38. What a disaster month, right? Well, you're at 60, which, you know, that's only 3 points into it. That's not a huge deal. But that puts 53 game. And where I'm going with the 53 is this. 53 is the high of the following month, that's where we came down hard, then we bounced along the bottom for about 5 months. But this still looks like it's going to be a little trouble in paradise. And that oil market, it is just going to be absolutely amazing watching that oil market tomorrow. And I wouldn't be shocked at the oil market, folks. It's, you know, Tommy and I were talking about this on our program this morning. My son and I, we do the Bull Bear Binary Option Hour with Darryl Martin on Monday and Friday at 10 o'clock, 10 to 11. And then we do the Money Masters Tuesday, Wednesday, and Thursday. And at this price, it's not worth shot in oil. It does look like an ABC down. That being said, I would rather be a buyer down at those lower levels if, in fact, you get the full price projection than be a seller right now. You know, what has happened in the Middle East hasn't caught a bid. There's no doubt about that, but it doesn't mean that it won't or can't in the future. You know, so we'll see where this whole thing does shake out. What is really pretty cool is that even with the dollar catching a bid, the dollar's at 99.46. It has not hit the gold market. You know, that gold market at 1,078, that wants to go after that 1,088 level, and we'll see if it trades like it traded yesterday. You're going to have volume behind that move. It'll get up and over it. We go take a look at a couple of the rand in South Africa. That is trading at 15.61 rand dollars to $1 US. What that does, folks, no doubt, is that gives some juice into the South African equities. You know, Harmony is up 5 cents today at $1.15. That's off a bottom of 53 cents. It's a big number. Goldfields, what you have with Goldfields, that's trading at 287. That's trading sideways. That had some volume in it yesterday. That is going to need more volume in order to get to higher price. We take a look at some of the higher volume stocks in this market. Oh, Fitbit. Let's go look at that. Man, they're telling everyone to buy Fitbit. Fitbit is down 20% today. Let's go see what's going on. Oh, man, it's an ABC down. Holy cow. Okay, so check it out. So Fitbit, wow, 30 million. It looks like it's going to do it. Let's see. How many? Yeah, we got how many minutes left? 12. Yeah, you got 11 minutes left. It very well could be an ABC down. So this is how your 8-point on this would be 42. Your B's 26. So that's 36. 14. 16 bucks would get you 16. $18. Man, this is going to be a disaster. So this thing is coming down hard. 18 bucks, and this thing went public. They just pushed this out, man. This is pretty intense. Wow. So they pushed this out at $29. And then it looks like they had a secondary at $20. Either that or, let's see, maybe they pushed it out at $20 and had a secondary at $29. Let me pull this up for a second. Pull this back. Yeah, they pushed it out at 20, had a secondary at 29, goes to 51 August of 2015, and then gives it up in spades. It's pretty amazing. The news, let's see what the news beside. Okay, it's just saying Fitbit takes plummets as competition in fitness devices heats up. Yeah, there's competition all over the place. The biggest I suspect, competition out here. Not that it's competition. The Apple Watch, folks, if you remember, the hype inside the Apple Watch bottom line is that, you know, Apple Watch, you don't need it. The market doesn't need it. The market's not buying it. What does that do? That says Apple wants to go lower. You stay right there, folks. We'll come right back. Dow up 11, NASDAQ down 5, S&Ps are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 3, NASDAQ's down 8, S&Ps are flat, and as we come into this close out here, let's take a look at what we have. The volume on the indices, we have 627 million on the NYSE. That'll end up coming at about 800 million. On the NASDAQ composite, you are at 1.6, so that would be about 1.8. So what do you do? Let's go over and we take a look at what you have here. What you have is this, is that market tried to get to a higher high, failed. Dow Industrials today got to 17,195. You're at 17,146. Can't handle higher price. We go to the SPY. What you have with the SPY? SPY gets to a price point out here of 201.90. You are at 201.29. You do 95 million shares versus the downdraft yesterday of 222. That is the indication that you are building cause on the way down. And it's just not a one-day phenomenon. But, you know, what we have had is that you've had continual lower highs and higher lows. You know, if you take a look at this SPY, it's pretty impressive actually. If I don't have to go all the way back to May, but we've had them since May. But if you go back just to November 3rd in the SPY, the high was 211. Next high was on, to get the exact number, was 211.66 on November 3rd. Next high was December 2nd, 211. Next high was December 17th, 208.48. Next high was last week, December 29th of 207.79. On the way, the lower lows, what you have with the lower lows is this. Your first low established out here, November 16th, 202.18. Your next low established on the 14th of December, 199.95. Next low established 199.83 on December 18th. And yesterday, 198.59. That's what you have. You have the setup that lower highs, higher lows. What is that the definition of, folks? That's the definition of going downtown. The NDX 100. We take a look at the NDX 100. What you have with the NDX 100? Subtle, exact same setup though. The Qs, your first high established out here, and there's a higher high in May, but we'll just go to November. November 4th, 115.47. December 2nd, 115.75. Well, that's going to be higher. Yeah, so on the Qs, you did take that over on December 2nd. So it would be December 2nd, that would be the first high, 115.75. Your next one would be December 17th, 114.48. Your next one would be the 29th of December, 114.54. On the way down, what you'd have is that you have the low that was established November 16th of 109.48. And you have the low of yesterday, which is the 108.12. So at the beginning of a new week, what you're going to also see out here is this, and this is where this is going to get wild, is that the December 18th benchmark, which was option expiration, which we took out yesterday, had big volume on the daily. On the weekly, it also had big volume. That being said, we're on tune to get into that, and we'll see whether it can get higher volume. What we do have higher volume across the dailies and the weeklies is the small caps. The small caps blew away that December 14th swing low and blew it away with volume. That was 53 million shares versus 66. You stay right there, folks. We're going to be coming right back. Dow Industrials are flat. Nasdaq's down 12. S&Ps are down $1.50. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, folks. Believe in yourself and everything that you can be. James Garner. Market-wise, let's take a look at it out here. We had the Dow Industrials up 9, Nasdaq down 11, S&P's up 2.5, gold contract up $2.80, trading at $1,078 an ounce. Now, what you have with gold is this, folks. Gold wants to go after its December 4th swing high, which is 1,088. We got higher yesterday, had volume on the move. Today, volume wasn't bad. Price is stable. What it's doing is it's laying right underneath that 1,088. And that's always a nice indication when you're laying underneath a swing point and you have volume pushing higher. I expect we're going to see that get hit the next few days. We'll see whether we get volume on that move, if in fact can get over that level, and it has the juice to do it. Silver is up 13 cents, $13.97 now. Silver needs to get inside the $14 mark. Silver did have price spread yesterday, had volume yesterday. That being said, it gave it up, meaning it sold off under the $14 level. You're 2.5 pennies underneath it. That doesn't seem like a lot. Even 1 penny is a lot. The reason being is that $14 is the higher trading range. And you want to, if you're a bull, you want to see it get into that range. Copper is at $2.09 a pound. Looks like copper has come off the bottom. That hit into the lower $2 range, came off that. It's been basically building some cause for higher price. Oil market, this is a disaster. So oil today is down 97 cents. You're at $35.79 a barrel on this contract. $35.35 is the low of this contract. It looks like, and we came down today with volume expanding. It looks like this could very well be an ABC structure on the way down, which would just be wild, man. Because if, in fact, we bust that B point, and I do expect we're going to go after it tomorrow, we bust that with volume, that is going to bring oil somewhere down to the $28 area. That is going to be, you get that happening, folks, you're going to see some destruction, fast and furious destruction in this marketplace. Bonds, the 10-year and the 30-year refuse to die. 10-year up 3 ticks today, 126.08. 30 down 18 at 153.22. Now, both the 10 and the 30 went topside yesterday, had volume. Price was okay, not great. Bottom line, you did have the expansion of volume, you did have the price. Both look like they want to get into higher price, lower yield once again. That is what the Fed already raised short-term rates once. They're claiming they want to go again. Bottom line, that being said, guess what? There's more buyers of bonds than there are bonds in the marketplace. That is what supply and demand is all about, and that's what you're seeing inside the bond market. What we have, folks, at the beginning of the year, the Treasury lays out what they're going to be selling in 5-year notes, 2-year notes, 10-year bonds. Bottom line, guess what? Because there's so many tax monies coming into the government, they don't have to sell as many bonds. So that is the phenomenon I think you're seeing out here. They laid out what the auctions are going to be. The auctions are less than the market was expecting, and I expect what you're going to see here. And that's even with the context that we do have large sovereign countries selling bonds. But guess what? There's more countries buying bonds. There's more states buying bonds, pension funds buying bonds. There's plenty of other folks that are in the marketplace that are natural buyers of bonds. What a natural buyer of bonds means is this, is that there's plenty of charters that you just can't be in the stock market. You have to be diversified. That's what you're seeing inside that bond market. King dollar, 507 ticks, 99.47. Now, King dollar, no doubt, has caught a bid. There's good volume in that today, too. Guess what, though? It hasn't whacked the metal market. Euro down 83 at 107, and the yen is trading at 119.02. We go over and we take a look at the S&P here. This is what you have with the S&P. The SPY out here, what we did is that you took out your swing point yesterday. You had 30 million less shares. That's where we come down. We got to a price point of 198. You did 222 million. That was going against the December 18th swing point of 251 million. That being said, guess what? Now you're just going to build cause to go after it again. Why am I saying that? Well, you got to a higher price today with 105 million versus your downdraft of 222. You would have needed an expansion of volume in order to get the higher price. It stayed higher price also. The NDX 100, the 3 Qs. So what do we have with the 3 Qs? Same type of setup. The 3 Qs have failed on price and on volume. What that means specifically is this, is that the 3 Qs came down yesterday to 108.12. You did 50 million shares. We got to a high today of 110.18, and you closed under the high of yesterday on the Qs today. What does that set up? That sets up that the Qs, number one, want to go lower. I suspect our next stop inside the Qs are going to be 104.01. Now, the culprit alone inside the 3 Qs, there's more than this, but we're going to go over to Apple first, because you're going to see Apple is throwing a spin to all the indices because of the weighting structure, particularly the NDX 100. So what we have with Apple tried to get to, well, it did get to 105.85 today, closed at 102.71, out of the range. Apple's on its way down to $92. Huge number, folks, okay? And inside the Dow Industrials, Apple was the culprit. I believe that was the leader. That was the leader on the way down. That was down 2.5%. Disney off 2%. And Disney's a mess, too, by the way. Disney, in particular, it's really wild when you think about Disney, that you know that Star Wars has taken in more money than any other film has taken in. Bottom line, we'll continue to take more money in. Well, guess what? Disney just went down 20% from November 23rd to today. What is that all about? That's all about ESPN. That's about cord cutting. That's about we are changing our habits of how we get our news, how we get entertained, how we get our sports, all of the above. Bottom line, folks, the internet is the whole ball of wax. And it's not only just a whole ball of wax, it's a whole ball of wax in an incredible way. Dollar, let's go to King Dollar. We take a look at King Dollar. What we have with King Dollar is this. King Dollar caught a bid. Bottom line, I suspect we'll get a little bit higher, but it's not affecting the metals market right now. King Dollar is up 50 cents. 500 ticks at 99.47. 99.96 is probably game. We did 38,000 contracts. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming back with our man, Mr. Andy Heck. Dow finished up 9. NASDAQ down 11. S&P's up 3. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 9, Nasdaq down 11, S&P's up 3. And as we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, Andy's got a great show right here at TFNN, right after me, 5 to 6 Eastern Standard Time. Now, no matter where you are in the country, listening in your car, remember that you can get all the programming at TFNN right on your cell phone, tfnn.mobi. Gets to the audio. You want to get the Tiger TV? Real easy, folks. Just go to tfnn.com. You'll see Watch Tiger TV on the right-hand side. Hit that button. Bang, it comes up. You can get the audio, get the video, get all of the above. Andy's also got a great newsletter, the Technomento Commodity Report. You can test drive that by coming over to our website at TFNN. Go to newsletters, go to trading newsletters, and test drive it 30 days absolutely free. What's happening, brother?
Hey, Happy New Year, Tom.
Happy New Year to you. Let's make it a great one, man.
Let's make it a great one. It certainly started out interesting in the markets, huh?
Yeah, interesting is always a wild word.
Oh, yeah. Very interesting. And I wanted to mention, you know, I had an article that I wrote for Seeking Alpha, and I collaborated with some of my colleagues at the University of Colorado, Denver.
Yes.
And you know, there's two of them. One of them lives in San Diego. One of them lives in Denver. And we wrote it last week, and it was the 10 reasons that the stock market's going to tank in 2016.
Really?
We really didn't think it was going to happen on Monday.
And one day.
Right. But I mean, it came out before the market opened Monday.
Okay.
But it was in the hopper before the Chinese stuff. And actually, tomorrow, you're going to have one of my colleagues, Sean Wright, on your show in the 4 o'clock hour.
Great.
And I'm going to have Gavin, the guy who I teach with, on my show for the full hour.
Okay.
So on Thursday. And that's going to be really interesting because these guys are really smart. I mean, both Gavin is an Oxford grad, and Sean was, I think, top of his class at Wharton.
Yeah.
And these guys do a lot of work on modeling on the stock market, and they are very negative for 2016. And I think you'll really find Sean really interesting.
That's
so
awesome.
I just wanted to mention that. As far as commodities are concerned, you know I love the statistics. The worst performing commodity sector in Q4 and in 2015 on the year, of course, was energy. And the best performer, energy, by the way, down 25+% for the year, down 15% for the fourth quarter.
Okay.
The soft commodities, best performing sector, down 0.75% on the year, but up 12.6% in the fourth quarter. And every single commodity, the coffee, the sugar, the cocoa, the cotton, and the orange juice, posted gains in the final 3 months of the year.
Yeah.
Now, the most interesting thing I see going on here in commodities here is crude oil.
Okay.
And there is huge inherent weakness. Look, what's happening between two OPEC members, the Iranians and the Saudis,
right?
You know, generally should really boost oil prices, but it is showing how inherently weak these prices are, that we're closing today below $36, and we're actually lower after the close. There continues to be a huge divergence between the XLE and crude oil, And in terms of other commodities, some other commodities in crude oil, and quite frankly, something has to give. If oil is going to go down and test those 2008 lows and perhaps break them, and
we're
put
right
a
next to it now. Yeah,
right. If it puts up a 20-some-odd handle,
I know
it is very bad for the stock market, and it is very bad for other commodity prices as well, because the price of production will go lower and starving producers will sell more. That's my opinion here.
You know, I can see that for sure. You know what's going to be wild, folks, and Andy, is that we know that what happens to the yin and the yang, folks, because the oil market is so big, meaning there's so many jobs inside the oil market. I was listening to an interview today in Houston, and I had listened to a few interviews like a few months ago in Houston, and they were claiming, and they always claim this, by the way, folks, okay? Houston is an oil capital of the world, okay? And, you know, a few months ago, one of the CEOs were on, and they said, no, things have changed. You know, we have this and that. And it's like, you know, I was listening to it. I said, well, you know, maybe they did, maybe they didn't. Well, today, they had a CEO of a development company. And I was listening to him, and it was really cool because Brian Sullivan was actually interviewing him, and Brian had said to him, listen, man, you know, is this oil hurting? And he says, yeah. He says, you know, we might think, you know, we're not in the oil business. We're in the oil business. And, you know, and they have developments that are down 25% year over year, folks. Okay?
Absolutely.
You know?
And remember one thing about Houston and about oil in the U.S. In 2015, the bear market in oil had started really kind of at the end of 2014, and a lot of oil producers and people in the business had hedges in place.
Yes.
Now those hedges are coming off. I mean, they are coming off dramatically. And oil was in a backwardation, so there was not a lot of forward hedging done really deep into the future back in June 2014.
Right.
Now that these hedges are coming off, you're going to start to see them really feel the pinch. And I think you're going to see production in the U.S. drop. The problem is, you got the Saudis and the Iranians who are going to sell as much as they can and more than the other because of this, this match that they have going on.
Well, even just to pay their bills, right? I mean,
just to pay their bills,
right.
Yes. But the Iranians are getting $150 billion, and the Saudis are choking here, in many senses financially. And today the war in Yemen, the proxy war in Yemen, is getting ramped up. So this is going to be very interesting to watch. And the oil price, hey, this thing is telling us if it can't go up in this situation, I think it has to go down.
Yeah, no, listen, I'm not surprised that it's going after the low. I am surprised that it's going after the low this quick. That's, see, the way it's set up right now, folks, is that when oil spiked yesterday to $38, it sold off immediately. It sold off at 38 something it was at. Man, it sold down. It continues to sell it down today, and the volume was expanding. And when you're right next to that swing low with volume expanded, it's like, oh man, overnight this thing can get blown away. So
right, absolutely. I mean, but I wouldn't be short crude oil here, Tom, because I think it's a very dangerous trade, especially with what's going on in the Middle East. Because you know as well as I do, we could wake up one morning and something crazy could happen.
That's my take. There's plenty of things to be shot. I wouldn't, what I said to Tommy earlier when we were doing our show earlier, I would like to buy, if this is an ABC down, I would like to be buying it at those levels when everyone thinks oil's going to go to zero, depending on what the volume is. That's where my head's at right now. And I like trades that set up a longer-term trade that can keep watching it for a while. It's like, okay, man, you get that going, because realistically what happens, folks, it seems on markets all the time, and this is why markets are so vicious, is that you go down, you go down, you go down, and people think it's over, and then you go down again. And going up is the same way. You go up, you go up, you go up, and then bang, you go up again, you spike out, and,
Absolutely. I mean, but here, if I had to pick something to be short, I'd rather be short oil stocks.
I like being short the NASDAQ NDX 100. That's a beautiful thing.
I like being short all of them.
You stay right there. We'll come right back,
Sure.
all right?
Sure.
Dow finished up 9, Nasdaq down 11, S&P's up 2.5. We're going to be right back. It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, when you come over to our website at TFNN, what you're going to see right in the front page in the carousel is our man, Mr. Dave White. He's going to be doing a special 60-minute subscriber event. And what that's going to be all about is using short volume to profit on both sides of the marketplace. Now, that webinar, folks, is going to be on January 20th. That webinar is good for all subscribers of his two newsletters, which is the Path of Least Resistance and the Tech Insider. You can get both of those newsletters right now, test drive them for free, and be in that webinar. The way you do it, go to TFNN. You can sign up right now. What Dave is also going to have, he's going to have a white paper that's going to be out approximately a week from now. Now, as you're also over there, under breaking news, what you're going to see is that you're going to see the first article, Avoiding Stops with Binary Options. That is an article that's written by my son, Tom. Check it out. And, of course, that is all about the Nadex products and binary options and inside a volatile market, exactly what defined risk is, number one, and that you can have defined risk. And the type of volatility that we have right now is pretty cool when you are dealing with defined risk. So, commodities, no doubt, they took a licking big time. It's going to be intriguing to see. What do you think about gold right now?
I think we're going to see the January effect in gold.
Okay.
Last January, we made highs of the year. And it looks like it's starting out very similar this year. And I kind of wrote about that this weekend. Very interesting. In the first 20 days of last year, gold made the biggest up move of the year. So this year's starting out very much like last year, with gold showing some strength. But I'm concerned there's other things. Silver still remains below $14.
Yeah, it's a dog, right.
Palladium is going after the lows. It's going after 520. Palladium was the worst performing precious metal last year. It was down like 27%.
Yeah, but palladium came off like a $200 level, man. I've owned palladium at $200. I mean, palladium, you know.
Palladium was $80. Look, gold was,
right.
Yeah, but gold was also, you know, under 300 in 2000. So,
and I'm not even talking about that long ago, though. Yeah, so.
But still, the bottom line here is that the whole precious metal sector, these divergences continue. You still have the silver gold ratio at 77-1. You still have platinum at $190 discount to the price of gold. But the January effect in gold could mean that gold, you know, is going to pop a little bit here. You know, you have things coming up, Chinese New Year, all that kind of stuff. So maybe there's some demand creeping into the market in January. And, you know, we'll have to see how where it gets to. I can't see gold getting, you know, above like 1190. I mean, which is way above here.
Oh, that'd be it. If gold's at 1190, man, those South African miners are going to make so much money they can't see straight. Did you see the Rand? The Rand's trading at $15.6.
Yes.
$15.6
that's also another reason that it ain't getting there. I mean, I could see it up to about 1100, 1120. I just don't see it with the other commodity prices doing what they're doing, and with a general deflation.
I thought you meant the Rand dollar, because that correlates.
Oh, no. The Rand, I mean, that, you know, the dollar, you know, I have been very consistent for a year. I am just bullish like crazy on the dollar. I think we're going to take out that 100 level at some point this year, and we are going to run. And I think the euro is going to go to parity against the buck, because
we're all going to go to the Amalfi Coast, man.
Well, yeah. I mean, the problem is you get there's so many. The immigration crisis is picking up steam there, and that is a very depressive factor for the European economy and a very depressive factor for the euro itself.
Yeah, it is.
So
doubt.
You know, the dollar is the best horse in the glue factory. The dollar has the best yield. The dollar's yield will probably increase this year. There's very little bearish things to say about the dollar, except that from time to time it gets overbought.
Yeah, no,
and the central banks step in and crush it.
There's no doubt about that, right?
But they crush it, but it comes right back.
Right. Which makes sense, by the way. You know?
Right. I mean, it's a fundamentally strong currency, but listen, you got so many things going against commodities here. But I think this is going to be a year of big volatility in markets, Tom. We're going to get huge rallies. We're going to get huge doses. We're going to get volatility all over the place. So it's a trader's paradise. It's an investor's nightmare. I think that, you know, the market that I'm most bearish on is equity prices. In that article, I listed 10 reasons why those equity prices, to me, look terrible. I mean, they look terrible. And you know, we'll have to see what happens. I mean, there's always natural buying in the stock market because of 401ks and SEPs and retirement plans, but we've gotten to valuation levels. The PE is above 25. You know, price earnings ratio is up there. You got a lot of M&A activity. You have a tremendous amount of company buybacks. And you know, if you look at the NASDAQ, you know, and some of these indices, if you take out the top, you know, the big news companies, the performance was very weak last year.
You only had to take out 10 S&P stocks, and everything else was down. Right.
Everything else was down like 4.5%.
Right.
So, and we've also, by the way, 7-8 years in a row of bull market. Hey, it's correction year. 2016, correction year and election year.
You know, it's going to be really weird, folks, if in fact this shakes out like this, because you get a picture of something that, you know, you have 2000, you have 2008. Well, guess what? We're at 2016, and it's going to be really weird if that cycle comes in. You know, not that I'm not into that, folks. But I'm saying to myself, oh, this is kind of weird, man. And this is how the dates go, too, by the way. I happen to remember the dates because one of them is my father's birthday, another one is someone else's birthday. But March 10th, January 14th, those are highs that, in fact, I think the January 14th has hit twice.
March 10th, my son's birthday.
Yeah, it's my father's birthday. I mean, it's crazy, man.
Yeah.
You know
what? It's also cyclical presidential election years, and we have changes in government. Big changes. So
yeah, I don't buy the markets are going to do what they want no matter what government's
Let me
there.
tell you something. If any presidential election in history has influenced markets, the one coming up will. Because the one coming up is really much different than others we've seen in our lifetime, I think. I think we have candidates who are leading on the Republican side who are, not your norm.
Have you seen the on PBS the
Ken Burns?
Yeah, Prohibition.
Yeah. Yes.
Okay. Folks, if you haven't seen this, go to PBS when you get a chance and watch Prohibition. I was so elated watching this last week because they were crazier then than we even are now. And so there's hope all around. You know what I mean?
I know. I know.
That was that's amazing just watching that whole laid out. And that was like a 10-year layout, man. You know?
Yeah.
So,
well, we're coming into another cycle of real craziness.
There's no doubt what you're saying. The volatility. I think the volatility's here and it has been here for since August, really.
Right.
You know what I mean?
Right. And it's going to continue.
Yeah.
No question.
Yeah.
No, it's going to be interesting. It's going to be fun. It's good. There's going to be opportunities, but you got to be careful. You got to trade with stops. You got to take profits when they're available. And keep looking for the next trade. That's what these markets are all about.
Well, listen, man, we look forward to hearing you in another 20 minutes.
All righty. I'll
Awesome,
see
man.
you soon.
Thanks,
Take
Andy.
care.
Have a great one. Have a safe one. You stay right there, folks. I'm going to be coming right back. And, of course, Mr. Andy Heck's going to be coming up 5 to 6 Eastern Standard Time. Get it right on your cell phone, TFNN.com. Just hit Tiger TV, folks. Come right up. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We take a look at the some of the Dow stocks out here, and this is what you have. Boeing was up 57 cents. You had Disney down 208. Disney is off $20 from just the last counter trend bounce it has. That is with the Star Wars franchise intact. What is not intact, however, is that ESPN franchise, specifically the amount of people that are cutting cords and the amount of bread that evidently is going to get chipped away over the years. Entertainment itself, folks, is changing, and it's changing really quick. And actually, you can see the amount of change when you take a look at the numbers that Amazon came out with. Their numbers were absolutely incredible, okay? Now, it didn't help the stock, but it gives you an idea of how much we online, how much we're using online, and it's absolutely huge. Amazon fulfilled more than 1 billion, with the B, third-party items in 2015. Amazing. Sponsored product adoption by sellers is up over 100%. 23 million items were ordered from their sellers on Cyber Monday. Okay. Bottom line, what has happened is that we're past the tipping point on the internet now. Specifically, what that means to me is that we go to the internet for everything. One button, you click, you're ordering something. Another button, you're listening to entertainment. All of the above. Now, with that being said, listen to this. This is pretty intense. Yahoo blew their brains out of $100 million. They shut down their part of a video service that they had been using. Well, they thought that they could, get going. Bottom line, couldn't get any traction with it. Why? Because you have YouTube and you have Facebook. YouTube and Facebook are the runners in this whole deal. The video portal that they shut down was Screen. They spent $100 million in it in a few years. Pretty amazing, actually. But there's no doubt that the YouTube and Facebook are very easy to use. Click of a button, you're out there. And, of course, that's where all the business is. And that's where the growth is, too. We take a look at the, let's see. Let's go to look at Walmart. Because what Walmart had been doing, that was quite a downdraft. It's come off this bottom of $56. You're at 62 right now. Put this on a weekly. Yeah, this looks like it's still a counter trend bounce. We're down from $90. You hit a low out here of 56. You're coming into a monster downdraft. You're coming into a few monster downdrafts. The largest one being when Walmart went from $57 to $67 to $58 with 167 million shares on the weekly. We're going to do all of about 70 million shares as we're going into that. That is not going to fly. We go take a look at Big Blue, IBM. This is another equity that has been drifting dramatically lower. IBM looks like it wants to go after its swing low once again. And when you do look at IBM, what you have with IBM, this has been a one-way trip for IBM. The high that had been established out there in 2014 was 209. Let me pull this back more, because 210 is the high in IBM. Yeah. It's actually, man, that's even more intense. Yeah, it's 215.82. So the high was established March of 2013. And it's been on a one-way trip down. Right now you're at 135. The lows out there that established at 131.65. And, IBM continues to have a problem. What IBM has continued to do is get rid of workers in order to basically bring money to the bottom line. What you have out here, let's see. Right now, they have 379,000 workers as of September 30th. On a fundamental basis, what you have is that you have a company that so check this out. This is pretty intense. In 5 years, IBM has gone from taking in $104 billion a year to taking in $81 billion a year. 81. $20 billion less. That's intense. And as Aman Duffy says in the Den, yeah, they continue to buy back shares, get rid of employees and buy back shares and waste shareholders' money to hold it up. So IBM, I suspect, continues to want to get into lower levels. Let's go take a look at the ExxonMobil. So inside the XLE, you have ExxonMobil, you have Chevron. Those are the king dogs inside there. Now, the oil contract itself looks like it wants to go after the 35 high volume swing low. ExxonMobil, listen, it's a good looking stock. That being said, don't touch it. Why? Because it also has a high volume low from the 24th of August at $66. Now, it doesn't have to come down to 66. When you have a high volume low, folks, what it can do is it can get to the high of the low. That's where I expect it will go. We'll see whether there's enough volume at 71. That's only down $7. And we were down at 73 on December 8th. So you can see that it doesn't take much to get down there. We go into Chevron, because Chevron and and Exxon are the two kings of the XLE. Chevron, decent looking equity also, but guess what? That also has a high volume low that's out there on the 24th. And the high of that high volume low is 75. We're at 89. Chevron was down at 84 on the 8th of December. So this number here, and what I do expect, by the way, is I expect they're going to be going after this tonight. So we'll see where this shakes out. Now, that being said, let's go over and take a look at Asia, because what we had with Asia is this. Asia last night, you had the government into the market. 1 second, let me get this up. We had the government intervening inside the market, buying the market, which is normal, by the way. It's not a big deal. They still couldn't hold the market higher. What we had, and this is in the context, so Shanghai last night was only down 0.2%, which is nothing, by the way. That being said, what we have, it was down 7% the night before. It got as low as 31.89. It climbed up 100 points from that point. And guess what, though? You get monster volume, man. You did 26 billion shares. You're going into 44 billion, so that's not bad as it is. You're still going to test the low of last night, but it looks like it actually wants to get into this 3,000 to 2,800 area, which is the 26th of August swing low. Now, what was supposed to happen on January 6th, tomorrow, is that when Shanghai started coming down in the summer, folks, they put in regulations that if you own more than 5% of the stock, the institutions, you cannot sell your stock, period. Just can't sell it. That was a 6-month moratorium. That 6-month moratorium would have been over tonight, that they could have sold tomorrow. Well, they just extended that indefinitely, okay? So the bottom line is that easy to buy, now trying to get out. It's not even close. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow up 9, NASDAQ down 11, S&P's up 2. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And if we go over to Apple, so our man, Mr. Dave White, is telling us in the den. So Apple fell after Japan's Nikkei Asian Review reported that the U.S. company would reduce the output of its latest iPhones by about 30% in the first quarter of 2016. Folks, that'll be a total mind blower. There's pressure there, but let me tell you something. When the numbers come out, if Apple comes out and they even have a reduction of 10% of their iPhones, never mind 20 or 30%, you will see that stock get tanked in an extraordinary way. The reason being is that when you get a momentum stock like we have with Apple, right, you have a couple different things that are going on there. They absolutely changed the world, okay? You have the iPhone, the iPad, the music, okay, the whole ball of wax. Now, as they were changing the world, bottom line, stock goes from, all of $17 and, runs all the way up to $134, splitting a few times. That being said, it seems that on a logical basis, everyone has what they need. You only get so much, you have so much, and that's it. And they're good products, so they last for a long period of time. When I look at this Apple chart, it's like, oh man, this thing is set up for like $88 in a heartbeat. Now, if you hit $88 and we hit $88 with volume, that is huge problem, because then you will see 100% move of a move. You see $38, you see it come all the way back, which is absolutely bizarre when you think about it. I saw a chart, and when I'm talking about bizarre, and this is how markets work though, but if you're a fundamentalist, you absolutely want to wrap your head around this, is that there's a chart, if you pull up I'd Google Bloomberg chart, Apple, US stocks, and China. And inside that chart, it's showing how actually inexpensive Apple is on a fundamental basis versus our markets right now versus China, okay? Apple was running at something like an 8 or 10. You know, our markets are running at 25. China's running like at some outrageous number. When you look at that, it's like, wow, what is that all about? Well, what that would be all about is that you could have a lot of cash, but if you're not selling, if you're not accelerating inside the marketplace, you don't get paid for it. That's public markets. That's what public markets are about. And you know that when you go to a high number, it's much harder, number one, to make that number higher. That being said, it's even harder when, in fact, they got to a high number because their products are so outstanding that everyone has them. And then what do? Bottom line, if you have them, you have them. Okay? So, you know, we'll see where this thing shakes out. My take is that you can, when you're looking at the broad market, you can just look at Apple itself. It hasn't moved in a year. It's been moving down. It's going to move lower. And that's where you want to wrap yourself around the aspect of what is the weighting structure of Apple inside the indices. And it's huge. Apple affects the Dow Industrials, it affects the S&P 500, and affects the NDX 100. The largest effect it has is of the Dow Industrials and the NDX 100. The Dow today, it was the leader in the Dow. It was only down 2.5%, and down $2.63, but that was the leader taking the Dow south. Inside the NDX 100, I don't even think it was the leader. Yeah, it wasn't. Now watch. What the leader were two of Apple's suppliers, Skyworks and AFCO Technology. They were both down. One was down 5.9%. The other was down 3.3%. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. You stay right there, man. Mr. Andy Hex coming up next. Growling and prowling with you. Go get him, folks.